What's up, traders? It's Chris here. So, is it time to buy stocks? This is one of the biggest questions I am getting from my students, from people who are even non-students who just have investment portfolios, good-sized investment portfolios. Hey, Chris, is it time to buy stocks? Has the market bottomed yet? You know, a lot of people are anxious to find this bottom and wondering when the bottom is, wondering when is a good time to invest. Stocks have sold off heavily from the peaks, over 30%. Some people are thinking it's overdone, and they've noticed that the market has rallied over the last few days. And so it's a great question. Is it now time to buy stocks? And so we're going to get in this question in today's video. And there are some really positive signs, looking in terms of why people should be looking at potentially buying stocks right now. For example, here's where the market started to sell off 2021. That's when really this bear market started to happen. And what do we notice over the last few days? This is the S&P 500 daily chart here. So all these candles are dailies. We noticed that we have actually, 3 days, the first 3 days in this entire sell-off where the market closed above the prior market highs. So, this closed above this prior market highs, this closed above this prior market highs, this closed above this prior market highs, this Friday was the first day that in a row, after 3 in a row, that didn't happen. So there's some positive signs here. This really did start to bottom. We kind of have this inverse pin bar here, which is basically, if you look at this wick, the price section moves up. That's an intraday attempt to rally. And it was an intraday attempt to rally, but it failed and closed right where it opened. But then the next day, it pretty much opened, didn't really go down at all, and just went straight up. So it tells you that this attempt to rally on this day was followed up by strong buying on the next day. So it tells you that there were some bulls in the market that were ready to continue pushing against this deep bear trend. They had tried to rally before and failed. And in their second attempt, they were successful in doing it. Then in the next day, coming up down day, we did close not much higher than where we opened, but we did close above the prior day's highs. That's a very bullish sign. And then the next day, after a brief intraday dip, we closed much higher, close to the highs, above the prior day's highs. All a very good sign. And so a lot of people are saying, hey, Chris, the market sold off. I mean, looking from the highs, we've sold off top to bottom 36%. And right now, we ended last week down 25%. And a lot of people are thinking, is it time to buy stocks? Stock markets have dropped pretty far. 25 to 35% is pretty deep for a bear market. And so a lot of people are asking the question, is it time to buy stocks? And while there is a decent amount of positive evidence in the technical charts, that there is some good, the bailout package has finally been passed in the US. That's very helpful to a lot of businesses. I think that's part of what you're seeing here in this relief rally is that, hey, now the stimulus packages, hey, this is probably going to be supportive for a lot of companies and the economy as a whole. But my overall assessment based on a lot of other things, particularly history as well, tells me that it's unlikely we've hit the bottom. And if it's unlikely that we've hit the bottom, then I don't think this is the time to be buying stocks right now as a whole. And let me kind of get into this. So we're going to look at the Dow Jones because it goes a little bit further back on TradingView charts. And what we're going to do is we are going to, luckily I have for you done all the work, but we're going to look back over the last 40 years and we're going to look at every single 20% decline or greater. And when you start to look at these declines and how they have behaved, then it kind of tells you that it's unlikely we've hit the bottom. So to give you perspective, our current decline, peak to trough on the Dow Jones is 5 bars. It's lasted a month and a week, 34 days, and peak to trough we off 38%, and we are right now about minus 25%. So 5 bars, 34 days. If this is the end of the bull market or end of the bear market, this will be the fastest bear market in history. The fastest bear market prior to this was about 3 to 4 months long. So if this bear market is only 1 month, that would be the fastest bear market in history. Seems unlikely that that's the case. History tends to suggest that this bear market has got more time to go. So let's just look over a few of these bear markets. It's amazing when you scale back, you think, oh my gosh, how far we've actually come. So starting with 1987, Black Monday, the bear market crash, 56 days total, lost about 41% from peak to trough roughly. And that was over 56 days. So that is a short bear market by comparison. Now, just the bottom, if you look at this bottom, look how long it took for this market to really bottom. And keep in mind, this week was the weekly bottom, but then it had a relief rally, or what they call a bear market rally. And that bear market rally, if you look at just from bottom to top, that's 26%. So a lot of people think, oh my gosh, climbing 26%, the market's done. Yeah, the market sold off again and it just went sideways. The bottom itself was 224 days long. And the recovery period to get to these prior all-time highs, 735 days. So I've had some investors and some company owners who aren't traders but they, are paying attention to the markets and they're asking me, hey, Chris, what's your experience on the market? A lot of them think that the market's just going to rip roar right back up. It's going to V-bottom really quick. And my history suggests otherwise, that bottoms and recoveries take time. But let's just look at the evidence here. So early 90s, we had another 20% decline, 22% decline. This was 12 bars over a period of 84 days to hit the final bottom. We had 14 bars, 98 days of just the marketing bottom. And so again, the market didn't just bottom or V-shaped bottom or anything like that. It took time. Now moving forward a little bit. So here we are, late 90s. I think this was tequila crisis. The market sold off 21% over a period of 6 bars, 42 days. So this would be the next shortest 20% decline in history compared to the current one they have right now. That was 42 days, and the bottom itself took 1, 2, 3, 4, 5, 6. And keep in mind, after hitting the bottom, again, another relief rally or bear market rally off the bottom over 10%. So it's not common to see 10, 20% bounces off the bottom during these things. And look what happened. The market sold off and almost went to the bottom again. So the chances of us just V-bottoming just don't seem to play itself out with history. This recovery period from peak to trough and back to recovery again, 126 days. Now moving forward, looking at 2000 dot-com bubble. Started in March. This was about, if you go to here, 131 bars, 917 days long before we hit the final bottom. And again, look at what happened here. We have many relief rallies, bear market rallies while we're selling off, 24%. So that one was 24%. This one right here, 32%. And yet the market kept making prior lows. Even when we got towards the bottom, 20% rally off the bottom there. And again, another 23% rally. So to see the market rally 10, 20, 25% off of these lows, or at least the lows up to this point, is very common in bear markets. We're seeing the pattern that's not uncommon. The bear markets aren't just straight lines. They often have bear market rallies or relief rallies, and those can be 10 and 20% very consistently. So history is saying, look, it's unlikely we've hit the bottom after 1 month. Bear markets usually last a fair amount of time. Also, multiple relief rallies. Finally, this bottom is long. I mean, you're talking from July 02 to March 03. So it takes time for the markets to bottom. Then the GFC, what many of us are most familiar with. This was from peak to trough, 73 bars, 511 days. And again, many relief rallies. 13% off this one here, about 10% off that one there, 22% off this one here, 21% off that one there. So lots of relief bear market rallies. And only after a long period of time, between October 08 and March 09, several months, did we finally get a bottom and get out of this kind of bottoming structure. And that itself was a period of 294 days. So when people think, oh, well, it's time to buy stocks, I am just, history as a trader is telling me different otherwise. And it's not just the history in the price action. We are still, in terms of the number of cases in the US here alone, and in many countries, that number is still going up. We're still getting exponential growth. And keep in mind, we haven't even hit the plateau yet. And the plateau it's not like it's just exponential growth and then just hits a plateau and then reverses course. Singapore had that, but then it started going back up. Japan had that and started going back up. There's chances for reinfections. We haven't hit peak coronavirus in the US. So if we haven't hit peak coronavirus, and the moment you do hit peak number of cases, it's not just like an immediate top and then sell off to the bottom kind of thing. It takes time for the number of new cases to get reduced to where they're, not being outpaced in terms of cases, recoveries, and things like that. So, just in the US alone, it seems like the way it's going, since we haven't seen the plateau, we should be anticipating pretty much that we won't hit peak at least until the end of April. So if infections are continuing to increase here in the US, are people going to continue traveling more or less? They're going to travel less. Are they going to be going out more or less? They're going to be going out less. Those two things alone suggest that we're going to be spending less and less money. That means airlines are continuing to experience pressure on their stocks, pressure on their numbers. Their revenues are going to be really bad. Tesla is now, stopping production at their Fremont facility because they're getting low numbers. The chances of the effects of this in terms of stocks and companies and business, it's not like it's just like, oh, we're, just going to hit this and then businesses will just start, the cases will just drop and everything will start going back to normal. No, it takes time for things to recover. Many people are going to lose jobs during this. 3.3 million people, a record number of unemployment claims in the US alone. And it's not like that's just going to rebound instantaneously. Some companies are going to go down. Some companies are going to have to downsize. Some companies are going to have to go on credit lines just to recover. And when you go on credit lines, you don't just like all of a sudden hire everybody back to normal. You need time to build things back up. So when you think about, what history in terms of how bear markets have happened in the past, the average 20% decline has taken at least 14 months to recover. We're only 1 month into the bear market. It seems like we got time before there's a bottom in place and before the markets are going to recover. Super, super important. Also, when you go back to the S&P, the other thing about it is that look at the volume. If you look at this, let's just delete this line here. So here's where everything starts selling and volume just spikes up massively. This is the strongest relief rally and bullish candle close in this entire sell-off, and yet the volume is significantly lower than when it was selling up. So it tells me, even if we go to the daily chart on this one, we can see the daily volume on this relief rally, this bear market rally, is declining volume. What does that mean? It means that the market is rallying on lower participation. Generally, markets bottom when there is broad-based participation, when there is an increasing in volume. That means that more and more buyers are coming into the market. That's not what we're seeing. Volume's declining, lower participation. Generally not the sign of the market and bottoming. So when I look at the history of bear markets going back 40, 50 years, when I look at how long it takes for markets to recover on average, there's a really good chart I have on this right here, which is that this is all the bear markets in the S&P. Here's the length of the bear markets. Here's the length of the recovery. Of the last 10 bear markets, 20% decline or greater, only 3 of them have had faster recoveries than the bear market itself. We're only 1 month into the bear market. If this is the end of the bear market, this would be the fastest in history. We've had a 3-month bear market, a 4-month bear market, 6 and an 8. But a 1 month, it just seems unlikely. It seems like people are wanting to get back to normal faster, and they're really underestimating the effects of this. More than likely, we're probably going to be into the 6, 10, 12 months of a bear market before we even start bottoming and start our recovery. So I just don't see it. 30% declines, even when you look at them, their average recovery is over 18 months. So when you start to look at it like that, it seems unlikely that this is the best time to be buying stocks right now. It seems like we need to be a little more patient, see if this relief rally has a little more legs to it. Is a very good chance, historically speaking, that we're going to retest the prior lows. And if history has anything to say about it, it seems to me there's a much greater chance that this is not the bottom, that we got more time, more months into this bear market before we start to see a bottom emerging. So when I look at all that, when I look at history, when I look at how other bear markets have functioned, and when I look at the situation of the coronavirus just in the US, then you got Italy, Spain's becoming really bad right now. We haven't hit the peak in the UK yet. A lot of major industrial countries, we have not hit the peak yet. It tells me we are not yet there in terms of a market bottom. I don't think it's the time to be really buying stocks. And if you are going to be buying stocks, you have to be very strategic about it, because there are very specific stocks that tend to outperform when the market is in a bear market or is bottoming versus other stocks. And it's super important you understand the difference there. So with that being said, I hope you enjoyed this video. I look forward to your comments and questions on. Make sure to smash the like button if you liked it. Leave a comment below. Really helps us out with the YouTube algorithm and helps our channel grow and continue doing free videos like this. So do you agree with me? Let me know in the comments there. I hope you enjoyed it. I'll look forward to you. Good luck trading. Stay healthy, super important. Most important is stay healthy first, and then we can worry about making money later. So have a great time. Good luck trading this week, and I'll see you in the next video.